This is your morning brief for Thursday, March 7th. Okay, Micron was under a lot of pressure yesterday. It was down over 5% as DRAM prices are collapsing. Now, this is not entirely unknown. People are expecting, that, and I think it was because another competitor released their press release, and it was bad. They said pricing in DRAM was down 43%, so all the analysts jumped on it. It's worse than we thought. Which is, I think I would agree with that. Maybe worse than we thought, but it's not exactly untelegraphed either. It's been well known that this is going to happen. Micron's earnings are out on March 20th, and that'll be a really interesting day. I think, the shares are going to react one way or the other that day. Either it's going to be like worse than we thought, or it's going to be, it's not so bad, and the shares are going to go up, plus or minus 10%, depending on how that report comes out. I will say this, though. I think you should be more into buying after the earnings release because, yes, we're working through a down cycle, but only for a couple of quarters, and it should recover later this year. Let's just say later this year or early 2020. Look at my math, my years. It's almost 2020 when you start thinking about in these terms. Okay, so that'll be interesting. I'm quite fascinated by this whole story. Okay, the first 5G ETF arrives. That kind of relates to Micron, and I do think it's interesting. We've been talking about 5G for a few months now and how big it's going to be and trying to position the portfolio now. We do have these issues that we're seeing at Micron from basically the last cycle, and the next one coming on board it's not being the smoothest transition at the moment. So how do you play it? I'm not 100% sure, but I'm nibbling away on some of these pullbacks, but I'm not, I'm very wary that Q1, Q2, Q3 even could be a little bit soft until we really get into this 5G, but then you got to be ready. Okay, so anyways, this ETF includes Xilinx, Skyworks, Nokia, Ubiquiti network. So Ubiquiti's in our small cap model portfolio. Nokia I haven't looked at in a long time. It's an interesting play though. Xilinx is supposed to be best in class. It looks like it's a very good company to me. It does look a little rich, so I'm not sure. I want to learn more about Xilinx. And Skyworks looks fantastic to me. I really like that Skyworks. Okay, Kroger is down 8% in pre-market after they released their earnings. I could not find that earnings release, but it's obviously out because it was down 8%. Obviously, wasn't that great. I will say this: Kroger has not been doing well. So, I guess it wasn't. I guess it wasn't priced in. This is why I rarely try and pick a bottom when results are getting worse. I let them actually come in better. If I miss a little bit of upside, I'm okay with it. But I would buy Kroger when results do improve. I think it's overall a good company. I think overall long run it'll be fine. But I am going to wait till a legit improvement in return on capital, but just in results. Okay, Costco at the opposite end of the spectrum from Kroger is fantastic, and they report after the bell. I just love the company. It does everything right. Return on capital keeps, I was going to say improving, but really it's just been super consistent. So that's a better way to look at it. Around 12%, I think. I just ran it. Yeah, about 12%. And in fact, I say it's been flat, but it's actually been improving for about 10 years. It went from 9%, and it's just a slow and steady rise to 12%, and that took 10 years. I love that kind of stock. I really do. I would just give me dozens of stocks that go from 9 to 9.25 to 9.5 to 10, and they just creep up, and you usually get a long-term run in the stock, just like Costco. So that's a gem. Okay. Trump's loathed trade deficits jumped to the highest level in 10 years. This is partly his own fault. There's been retaliatory tariffs, which have completely made the deficit worse. And even our tax cuts, I'm Canadian, I didn't have one. The tax cuts contribute to a deficit because people have more money, and when you have more money, you spend it, and you spend it on foreign goods. A deficit is neither good nor bad. It's just something you need to know. And the consumer-driven economy of the U.S. is likely to have a trade deficit because people want to buy cheaper goods. And when they get cheaper goods, the savings goes back into the economy. So, look, I don't expect Trump to be an expert on macroeconomics. I'm not an expert, but I have taken lots of courses on macroeconomics. And what I've really learned about it is it's a big chain reaction. And you have to follow the chain reaction. You don't just go, oh, we're spending more money, it's a deficit, that's bad, let's change it. No, not at all. You got to at least take the next step of, oh, that means we're saving money. Oh, so therefore those savings can go into other goods, right? We can buy other things in the economy, domestically even. So, and then what happens with interest rates? And it all kind of, it's a chain reaction. It's a domino effect. Okay, and Trump seems to just stop at the word deficit. It's also a negative connotation sounding word. If we just changed that word that didn't sound so negative, I don't think he'd be so opposed to it. So it's neither good nor bad. It's just a function of where you're at in your economy versus their economy. They're a industrial economy. We're a consumer economy. We're going to consume. And we need to consume their goods because they're the cheapest. That's good for us. Okay, so it just drives me a little bit crazy when you're the president of the United States and you not need to be an expert, but you have experts on your team and practically ignores them. I will say this. What I am pleased about with these trade talks is let's fix the intellectual property problem with China stealing intellectual property from U.S. companies. If he fixes that, but all this nonsense about tariffs on consumer goods and then retaliatory tariffs on agriculture, this is just no good for anybody. Fix the intellectual property problem. If this is how we have to go through it, we'll go through it. But I think it's a lot of nonsense. Okay, there you go. That's your morning brief for March 7th. Let's find some gems.